Bitcoin hits an all-time high but stalls out at around 112,000. Let's take a look under the hood. Welcome back to the Bitcoin Layer. I'm Nick Bhatia. In today's episode, we're going to go through Bitcoin's price action. Yesterday, it hit an all-time high, jumping over $112,000, pulling back a little bit. So we want to know what is ahead for Bitcoin. Let's take a look at this first chart where Bitcoin has a golden cross. Golden cross is a technical formation. It's a pretty simple one. It means that the 50-day moving average has crossed above the 200-day moving average. The golden cross is something that is a positive technical development. It holds true across multiple asset classes, and it basically means that the short-term momentum of the asset is outpacing the more medium-term momentum. And so when you see this blue line pop above the red line, it means that the short-term momentum of Bitcoin is positive and relatively so to its 200-day moving average. You can also see that during these times after Bitcoin has a golden cross, highlighted in purple, that the Bitcoin price performs very well. So on this next chart, we have Bitcoin's performance after a golden cross, and what you can see is that the median observation is about a 27% gain in the following 100 days. So something to watch for when we look at Bitcoin's technicals, but instead of just looking at the moving averages and where Bitcoin is, we need a little bit more insight. How are we able to tell whether Bitcoin is overstretched, overheated, or just right? Now, if you guys are interested in our highest signal metric, TBL liquidity, and what underpins a lot of our analysis, make sure to go to thebitcoinlayer.com/subscribe, become a TBL Pro. Check out our report, Mean Median Mode, from yesterday, in which we go through all of these numbers. I highly recommend it. We believe it's an incredible value, especially when we are getting a metric that's giving us this type of high signal oscillator and signal as to where Bitcoin's price is heading. One more thing that we identified in our report is the volume of stablecoins being minted. Now, how does this work from a credit growth perspective or a bank balance sheet perspective? When Tether mints new USDT, what's happening is that it's receiving dollars onto its balance sheet and issuing USDT on the other side. Once it gets those dollars, we are assuming that Tether is going out and buying bills. We saw a headline yesterday that said stablecoin issuers now hold $182 billion in U.S. Treasuries, surpassing the reserves of countries like South Korea and the United Arab Emirates. This is a huge deal. The stablecoin usage of treasuries is simply a function of how much demand there is for these digital crypto dollars. And what is the demand for digital crypto dollars? Where does it come from? Well, in phase one of Bitcoin's life, it came from the demand to get dollars onto Bitcoin exchanges so that those dollars could be exchanged for Bitcoin. In phase two of Tether's life, we see Tether being adopted on the ground in countries like Nigeria and Kenya, for example, for an extremely convenient way to access dollars without having to use U.S. paper currency. Obviously, Kenya and Nigeria are not going to have U.S. dollar banking services available to the entire populace. So what do? They download a crypto wallet and they start using Tether as their daily currency. Comparing Tether to Bitcoin in these countries, we also learn that Tether is more popular than Bitcoin. And that is because of the stability of the dollar for day-to-day transactions, and also the barrier of a person in Kenya or Nigeria to understanding Bitcoin is much higher than understanding why they should be using digital dollars instead of their local currencies. So when we see information like this, that there are all of a sudden 1 billion Tether minted, 250 million USDC minted, this means that these digital stablecoins are growing in total market cap. It also means that the issuers themselves are getting dollars onto their balance sheet and swapping those dollars for US Treasuries. Now, why is a higher stock of stablecoins bullish for Bitcoin? Because it means more firepower. If you're serious about your Bitcoin, you need to start acting like it. Unchained just launched the Financial Freedom Bundle, a curated pack that includes a premium Bitcoin book, a new hardware wallet guide, and access to a private event with Tour de Meester. It's time to take control of your generational wealth. Make sure you go to unchained.com/TBL to request your financial freedom bundle. That's unchained.com/TBL. Blockstream, where the future of finance runs on Bitcoin. Go to store.blockstream.com and use code TBL for 10% off. Pick up a Jade Plus hardware wallet. It integrates seamlessly with your Blockstream app, and it's the perfect way for both pros and beginners of Bitcoin to get started with your cold storage. Store.blockstream.com, use code TBL for 10% off. Now on this next chart, we're taking a look at just the TBL liquidity index by itself. You see here a reading of 58.2 on this purple line, looking back about 1.5 years. And what we see with this 58 level, what does it mean? 50 is our expansion contraction line. When the metric is above 50, it means that our measure of liquidity, which is proprietary but inspired by a school of thought that is asset-based liquidity. We were inspired by Michael Howell's cross-border capital and have done a lot of work over the last couple years to develop our own metric. And this metric takes many aspects of global macro and combines them into a highly correlated metric with the stock market and Bitcoin. What that means is we have discovered through our iterative process and our research the main factors affecting the Bitcoin price, affecting risk markets. It's liquidity, but not just deposit liquidity. It is actually the assets of the banking system. The assets of the banking system, as they grow, it sponsors credit creation. It is the condition. And that's the key word here. I'm teaching my students this liquidity concept this summer. What I have explained to them is that you look at TBL liquidity, it goes up and down, and you're thinking, okay, this is going to drive stocks and Bitcoin up and down. But what you really should be thinking is that as this metric is going up, it is a healthy condition for credit creation. So the condition to create credit, the condition for monetary expansion, the condition for new cash. That is what we are gaining by looking at this metric. Because when this metric goes up, it means the banks are growing, the present value of their assets is increasing, and the ability to turn those assets into new deposit liabilities or simply make markets for its customers, meaning provide liquidity. And this is the classic definition of liquidity. When I say provide liquidity, it means provide a two-way market. Provide a buyer for the customer that needs to sell the asset. Provide the asset for the customer that wants to buy. If the market maker is making markets, making a two-way market, it means it's providing liquidity to that asset class. And when it provides liquidity to that asset class, what it's doing is it's creating asset-based liquidity for the entire system by picking up the phone and saying, yes, you are done on the deal. When the dealer does not pick up the phone, it means they are stepping away from the market. The bid-ask spread will widen. Liquidity for that asset will fall. And then TBL liquidity will fall as a function of higher volatility. All of that explanation is to show you that a TBL liquidity index at 58 and rising materially since April 2nd, Liberation Day, it's telling you we have declining volatility, more certainty, rising present value of banking assets, and most importantly, above anything else, a calming down of Treasury volatility and a lack of desire to purchase put options. And that means a sudden seizure of the panic that we will see 5 to 6% Treasury yields across the entire curve. So the stabilization of the Treasury market. And I should mention also that we've had another 10-year Treasury auction that finished very strongly, the 5th 10-year Treasury auction in a row with a positive, strong result. Remember that one 20-year Treasury auction a couple months ago that everyone was panicking? In fact, even policymakers on the Hill were noting this one 20-year auction being weak. And I told them, you guys are making a big deal out of nothing. The Treasury market is exhibiting broad strength, evidenced by several 10-year auctions in a row being strong. So a lot of FUD, a lot of dollar doomers, a lot of Treasury doomers. But zooming out, we are able to see the MOVE index in utter free fall, to be honest, since April 2nd. And that is corresponding with this move up in T-bill liquidity. It's also been accompanied by a move lower in the dollar. And here is the MOVE index here in black. You can see the spike that we had in 2023 and pretty much a downtrend ever since. And that spike in 2023, around the time of the Silicon Valley crisis, and you even see a recent spike here on the chart above this interquartile range that we had, but since then, straight down. It means calm Treasury markets, no panic. And then remember the analogy of the dealers, the market makers, picking up the phone or not. They are picking up the phone, they're making markets, they are keeping bid-ask spreads very tight, they're keeping repo markets very, very well greased. And all of that means that treasuries can move throughout the system very, very easily. Here's a look at the dollar touching a 14-year trend line. We do expect a little bit of a bounce for the dollar here, but you can see the move in 2025 straight down on the dollar. This is in reaction to a lot of recent shifts in fiscal policy, especially trade policy, what's coming out of the administration. Something to definitely keep in mind as we see TBL liquidity going up. The dollar is an inverse contributor there. So as the dollar falls, rising TBL liquidity, that has to do with the conditions for borrowing abroad. As the dollar strengthens, it makes local currency debt more expensive to pay back. It also makes that local currency denominated borrower that is borrowing in dollars, it makes it more difficult to take that next loan. And if that next loan is tougher to get, tougher to take on, it means less credit expansion around the world. And remember, that is the condition for risk markets. It's new money or not, rolling the debt over or not. Now, we have some fantastic on-chain charts in this mean median report. So I remind you guys, the bitcoinlayer.com/subscribe to get this on-chain data that we have, and then see where our oscillator is falling on TBL liquidity and what that says for the path forward for Bitcoin. We are leaning to bullish, so I want you guys to go check out that report. The last chart here is the 10-year yield. We've been talking about Treasury volatility. We've been talking about really strong 10-year auctions. But what do you see since the end of 2023? Pretty much a flat lining of the U.S. Treasury yield. This is not bearish. It's not bullish. It is stability. It is somewhat certainty. And that somewhat certainty, that somewhat stability, as you see the orange line, which is the 200-day moving average of the yield, essentially flat for a year. And the yield itself flat for about 2 years. Chopping around, yes, but in the end, between 4 and 5%. That this stabilization of yields at 4.5%, and a raging bull market in the stock market. A raging bull market, all-time highs for the stock market, despite Liberation Day, despite the claims for the return of the Dark Ages, despite the calls for a global recession on a global trade war. None of it is offering a recession. None of it is offering a Treasury crisis. It is resulting in very stable yields. And it is very notable to me that the stock market is reaching these all-time highs with yields chopping around 4.5%. It means that 4.5% yields by themselves are not a dangerous condition for stocks. Yes, when they were rising from 1 to 4, that was dangerous. But that's now 3 years ago. And so the stability of yields contributing to a bull market in stocks is very strong signal to me, and it should be you. Thanks for sticking with us today at the Bitcoin Layer. Like and subscribe to the channel. Make sure that you are following along on your favorite audio platform for all of you out there that are walking your dogs or at the gym, doing your morning walks under the sunlight. Please rate and review on your favorite audio platform. That helps us a lot. And for that next level of TBL liquidity, high signal, buy-sell indicators on Bitcoin, thebitcoinlayer.com/subscribe. We'll catch you guys next time.